Have you or someone in your family been living with a medical condition, disability, or long-term impairment, but never knew you could qualify for tax relief from the CRA? You might be surprised to learn that thousands of Canadians miss out on the Disability Tax Credit, also known as the DTC, every single year. And sometimes the missed amount can go back years. Over 1.7 million people were approved for the DTC in 2024. In today's video, we'll break down what is Disability Tax Credit, who may qualify for Disability Tax Credit, who can certify the condition, how to apply for Disability Tax Credit. When CRA sends Notice of Determination, Review, and Decision, who can claim Disability Tax Credit, and how family tax recovery may help. Let's get into it. What is Disability Tax Credit? The Disability Tax Credit, or DTC, is a non-refundable tax credit from the Canada Revenue Agency. Its purpose is to help people with disabilities, or their supporting family members, reduce the amount of income tax they may have to pay. The DTC is designed to offset some of the extra costs that come with living with a severe and prolonged impairment. The DTC is a non-refundable tax credit. That means it reduces taxes owed, but if the credit is larger than the taxes you owe, the CRA does not send the remaining amount as cash. And qualifying for the DTC may also open the door to other federal programs like the Registered Disability Savings Plan, or RDSP, Canada Workers' Benefit Disability Supplement, Child Disability Benefit, Canada Disability Benefit. So even if you're unsure, it may still be worth checking eligibility. Who may qualify for Disability Tax Credit? You may qualify for the DTC if a medical practitioner certifies that you have a severe and prolonged impairment. This could involve physical impairments, mental impairments, life-sustaining therapy. The CRA looks at how the condition affects daily living activities. Some categories include walking, speaking, hearing, vision, dressing, feeding, eliminating, meaning bowel or bladder functions, mental functions necessary for everyday life. The CRA may also consider the cumulative effect of multiple limitations. Generally, the limitation must exist almost all of the time, usually 90% or more, and make activities take much longer or make them extremely difficult. Who can certify the condition? The CRA requires a qualified medical practitioner to complete part of the application. Depending on the impairment, this could include a medical doctor, nurse practitioner, psychologist, physiotherapist, audiologist, optometrist, occupational therapist, speech-language pathologist. Different practitioners certify different categories. For example, an optometrist handles vision. A psychologist handles mental functions. A physiotherapist can certify walking limitations. If medical practitioners may charge a fee for completing the forms, that fee may be claimed as a medical expense on your tax return. How to apply for the DTC? There are two main steps. Apply for the DTC, then claim it on your taxes if approved. The application form is called the T2201 Disability Tax Credit Certificate. You can apply either online using the digital form, by paper form through mail. Step 1. Complete Part A. Part A is completed by the person with the impairment or their legal representative. You'll provide basic personal information and information about any supporting family member who may claim part of the credit. If using the digital process, you'll receive a reference number. You then give that number to your medical practitioner. Step 2. Medical practitioner completes Part B. Part B must be completed by the medical practitioner. This section explains the medical condition, how it affects daily activities, and whether the impairment meets CRA criteria. Once completed, the form can be submitted online or mailed to the CRA. When CRA sends Notice of Determination, CRA Review and Decision. Once the CRA receives the application, they review the medical information provided. Processing times can vary, but recently it may take up to 8 weeks or longer if additional information is needed. Sometimes the CRA may contact the medical practitioner for more documents or clarification. You can check your application status through CRA My Account using the Progress Tracker. Once a decision is made, the CRA sends a Notice of Determination by mail if your application is approved. If approved, the notice will show which years you qualify for and whether you need to reapply later. Some approvals are indefinite. Others may expire after a certain number of years. Once approved, you can claim the disability amount on your tax return. And if you were eligible in previous years but never claimed it, adjustments may sometimes be possible for past returns. If your application is denied. If denied, don't panic. The CRA will explain the reason in the Notice of Determination. Sometimes applications are denied because information was incomplete, medical details were unclear, or supporting documentation was missing. If you disagree with the decision, you may call CRA, request a review, submit additional medical documentation, file a formal objection. Who can claim the DTC? Usually, the person with the impairment claims the DTC. But if they don't need the full amount to reduce their taxes, some or all of it may be transferred to a supporting family member. A supporting family member may include a spouse or common law partner, parent, child, grandparent, sibling, aunt, uncle, niece, or nephew. The person generally must provide support for basic necessities like food, shelter, or clothing. And this is where many people get confused, especially when reviewing older tax returns or transfer rules. How family tax recovery may help. Family Tax Recovery is a Canadian firm that specializes in reviewing past tax returns and DTC filing to identify missed credits, deductions, and possible refunds. They also have a strong reputation, including a 4.4-star Google rating. Family Tax Recovery performs a detailed review of up to 10 years of past tax returns to identify opportunities that may have been missed. Even if you were approved for the DTC before, there may still be missed opportunities from prior years. If you're unsure whether you missed something, Family Tax Recovery specializes in retroactive tax reviews. FTR helps by reviewing each tax year individually for missed disability tax credits, helping with DTC applications filing, incorrect filings and missed deductions, ensuring claims are properly documented. Because sometimes it's not about filing again, it's about fixing what was already filed. No upfront fees. Initial review is free. If you want to learn more, sign up using the link in the description. If this video helped you better understand the disability tax credit, make sure to like, subscribe, and share it with someone who may benefit. Optional disclaimer. This video is for informational purposes only and does not constitute tax, legal, or financial advice. Always consult with a qualified professional or the CRA for your specific situation.